Ever wondered how Singapore's tax system works, especially for US expats? Let's dive right in. Singapore boasts a tax system that is both territorial and progressive. What does this mean? Simply put, it taxes income earned within its borders, and the rate increases as the income does. This differs greatly from the US system, which is based on worldwide income. So if you're a US expat, your income earned outside of Singapore won't be subject to Singaporean tax. Pretty attractive, right? But that's not all. Singapore's tax rates are also generally lower compared to many countries, including the US. This combination of territoriality, progressiveness, and lower rates makes Singapore's tax regime a powerful magnet for expats worldwide. However, it's not all sunshine and rainbows. There are complexities to navigate, particularly for US citizens abroad. Understanding Singapore's tax system is crucial for US expats, and we're here to help you navigate it. So, what are the key features of Singapore's tax system that you should be aware of? Well, let's start with a feature that will surely put a smile on your face. Singapore has no capital gains tax. Yes, you heard that right. If you sell a property, shares, or other significant assets, and make a profit, you won't be taxed on it. Quite a breath of fresh air, isn't it? Next up, we have the single-tier corporate tax system. This means that the profits earned by a company are only taxed once. The dividends are tax-free in the hands of shareholders. This is quite appealing, especially if you're thinking about setting up a business in Singapore. Now let's talk about tax residency status. In Singapore, tax is levied based on tax residency status, not citizenship. If you live or work in Singapore for at least 183 days in a calendar year, you are considered a tax resident. This is significant because tax residents enjoy certain tax benefits such as tax reliefs and rebates. And last but not least, let's discuss tax rates. Singapore has a progressive personal income tax rate structure. The rates start at 0% and cap at 22% for income above $200,000. What's more, Singapore has a territorial basis of taxation. This means you are taxed on income earned in Singapore and on foreign income remitted into the country. These features all work together to create a tax system that is both fair and beneficial to those living and working in Singapore, including US expats. The lack of capital gains tax, the single-tier corporate tax system, the tax residency status, and the tax rates, these all contribute to a tax environment that encourages economic growth and offers significant benefits to individuals and businesses alike. With these features in mind, it's easy to see why many US expats choose Singapore as their second home. Now that we've covered the basics, what are the tax obligations for US expats residing in Singapore? Well, as an American expat, you're required to file taxes in both Singapore and the United States, regardless of where your income is earned. This is due to the US's taxing system based on citizenship rather than residency. However, there's a silver lining to this. The United States offers something called the Foreign Earned Income Exclusion, or FEIEE for short. This allows you to exclude a certain amount of your foreign earned income from US tax, easing your tax burden. Another crucial aspect to understand is the US-Singapore Tax Treaty. This treaty was designed to prevent double taxation and can significantly impact your tax situation. It's essential for expats to familiarize themselves with the treaty provisions to utilize them effectively. While it may seem complex, meeting your tax obligations in Singapore and the US is manageable with the right understanding and preparation. To wrap up, let's recap the key points we've discussed about Singapore's tax system for US expats. We've explored the unique features of this system, which is territorial-based and includes a progressive tax rate. We've also delved into the specific obligations for US expats, such as the need to report worldwide income to the IRS, even while living in Singapore. Now, on to some final tips. Navigating tax laws in a foreign country can be complex, so don't hesitate to seek professional advice if needed. Staying informed and proactive about your tax obligations can save you from potential headaches down the line. Also, remember to take advantage of the tax benefits available to you, like the Foreign Earned Income Exclusion and the Foreign Tax Credit. These can significantly reduce your US tax bill. Remember, understanding your tax obligations as a US expat in Singapore can help you make the most of your time in this vibrant city-state. Thank you for watching.